Tuesday, May 6th, and I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, nothing really new here. I kept some PLTU long. I'm short Palantir, I'm long PLTU. That's interesting. That's very, very tiny. And this is a third of what it was before earnings yesterday. All right, waiting on AMD. I don't have a big position in AMD. It's nothing compared to what I was holding in Palantir yesterday. Which shout out to Josh for stepping up and doing the afternoon meeting for me yesterday, so I could just focus on trading the position. But I do have a position in AMD. I also have a position in Micron. I also have a position in NVIDIA. Were those on there? They were, right? Yeah, NVIDIA, Micron. Okay. So somewhat of an important report for those positions. So I got to monitor that. AMD should be coming out at 9:15. At 4:15. So in about 2 minutes. We got SMCI out. And they're trading down despite the fact that they warned just like a handful of trading sessions ago. Usually earnings reports I find are non-events if they had previously warned. It's usually baked into the price, but SMCI is still managing to disappoint despite a recent warning. We also have Upstart. Upstart getting smoke started. That was not funny. After hours here as well. Not going to bother to read the numbers on either of those. Did you laugh? All right. An easy crowd. Open trading up. Open Door Technology. Oh, it's a 77 cent stock now. I didn't realize that. And we're waiting on AMD, which should come out in 30 seconds. So let's see what that looks like before we do any type of real attempt of a meeting here. My internet dropped twice, just so you guys know, between 350 and 410. So if you lose me on the YouTube, I apologize. If you lose me, I'm probably not coming back. If you lose me in the VTF, I might come back. AMD, nothing but nothing. We were expecting it at 4:15, but sometimes these names don't come out when you expect them to. TEM just hit. Oh, TEM trading up. Maybe it comes out at 420. Oh, there we go. Up. I think the measured move on this would get you up to like 108. AMD adjusted operating income beats, operating margin misses, first quarter rev beats. I feel like expectations were so low coming into this. CapEx beats. It's not good. Just EPS. This looks like a fairly mediocre report to me. AMD Devices outlook for the second quarter non-GAAP gross margin is estimated to be 43%. Yeah, Q1 rev was a nice beat. That operating margin number's a miss, though. A 24% number. Here's my offer. Where's my offer? One second, por favor. Second quarter revenue estimate 7.1 billion to 7.7 billion versus estimates of 7.23. So it's good. I also felt like that AMD coming into this report was kind of the opposite of Palantir. I feel like everyone's got super low expectations of AMD coming in this report, and the stock's very beaten up into it as well. So I didn't think it was going to take a lot for AMD to move higher. Nvidia's bouncing back up as well on this. Yeah, second quarter sales view tops estimates at the midpoint. I think that's the key number there. Should help. Should help. All right. I will continue to manage this out of the corner of my eye. I don't think it should be too hard for me to manage. AMD sees second quarter gross margin of 43%, including 800 million in charges. Second quarter adjusted gross margin 54% without charges. Not bad. Not bad at all. Again, measured move I think gets you up to it was like an $8 measured move, and they hit this thing down in the close. So I guess more like 106.50 is the measured move. We just went up to 106. Okay. Again, what's Nvidia doing? Nvidia's popping up, but AMD's better. All right. I will, like I said, continue to monitor this out of the corner of my eye and trade a little bit while we do our afternoon meeting. Delivered an outstanding start to 2025 as year-over-year growth accelerated for the fourth consecutive quarter, driven by strength in our core businesses and expanding data center and AI momentum. Cool. All right. So look at that. We had a down day today. Finished down about 0.8% or so on the SPYs. About 0.8% or so in the Qs. That includes a 50-cent after-hours bounce on the AMD earnings. The IWM down like 1.25% on the day. TLT was up. The dollar was down. Oil was up a lot. Oil had a really nice day, and gold had a really nice day today. Let's look at our technicals. So yeah, look at that. We had a down day today, despite all of our systematic, never-ending bid that seems to come into this market. We gapped down pretty decent this morning. What I mentioned in the morning meeting was, kind of similar to yesterday. You could look for an opening bounce trade in the market. Off of the downside extension that's coming from the gap. I wasn't thrilled for the trade. It'd be a real little 5-minute chart trade, but I think as everyone knows, I really like my small time frame trades to be confirmed by the big time frame. And for the big time frame, yeah, we were gapping down decently this morning, which was creating a big gap that you could try to, buy to scoop up for a little bit of a trade. But despite the larger gap down this morning, it wasn't even getting us to the ADMA on the daily. So what I said in the morning meeting was, you can look for that opening little mean reversion trade in the beginning of the day versus like an opening low or some sort of initial pivot low. But I'm probably not going to be involved, and I'd be more interested if the gap was even bigger. If we were getting down to the ADMA or this like little 555 level, that would be a dip that I'd be a little bit more interested in buying. So we tried to bounce in the beginning of the day. Didn't even get to the ADMA, and then we were pretty weak off the open and broke new lows. And is it moving? Oh, look at that. Hold on. I got to get an offer out. This actually might get to where I need to sell some. QVCGA. Earnings are tomorrow after the close, aren't they? It's tomorrow after the close? Yeah, that's what I thought. Okay. Got tricked for a second because I'm like, oh, look at this thing moving. Am I missing something here? It's actually working towards where I'm offered. It's joking around. It only needs to go up 100% to get to where my first offer is supposed to be from where it was earlier. All right, cool. I wrote a couple offers. Thanks for the heads up on that, Tate. Yeah, so then we made new lows, and I don't know, we were pretty deeply extended at that point, so I kind of liked the idea of looking for longs, but I was really primarily focused on pound tier off the open. It's just been such a big position for me, and I was upset a little bit by the fact that it was even having earnings, because then I had to manage risk around an earnings report. So I ended up taking off a little bit less than a third of my position at like 124.50 for a decent sized loss, just because I had to. Got to manage risk. Got to live to fight another day. I would not have been able to afford properly uh, even the measured move to the upside if Palantir ripped on its report, let alone if it did what it did on the last report. That it was an $18 measured move on that thing. If it went to 138, I'd be in trouble. If it went to 160, I'd have a serious problem. Um, and we had seen, not that it matters that much into an earnings report, but we had seen some big calls go off in the recent past into the 160s, maybe even into the 180s. Just had me a little bit nervous with the size I had on, so I put on some options to hedge the upside a little bit, and I took off a third of my position. So, does that suck when it then gets smoked down on the report and you took off a third of your position at 124.50? Sure, it does, but I still had a big enough of a position that I was able to make a lot in the down move, and it was really just the right thing to do. I couldn't responsibly hold that amount of size. Honestly, I couldn't responsibly even hold the amount of size that I held. So I was trying to do some sneaky stuff with some options to hedge myself if that thing actually ripped higher, and I would have been doing major damage control into an up move on that. But lo and behold, the Palantir earnings report was great, but not enough. I thought it would go down. That was my expectation, just because the only thing that I've ever noticed with consistency on earnings reports, and it's not something I trade personally. I don't actually trade it myself, this concept, but it's something that I see happen often enough, is kind of what I'm just describing between Palantir and AMD right now, is that if a stock has a really big up move into the report, then there's a higher probability, I would say, of a down move, because if you get like a good earnings report but the stock went up a lot into it, then it is a lot of times not enough. So like a TikTok that's the most I know you're a young guy, Liam. That's the most like millennial Gen Z thing I've ever heard. And I'm not surprised at all that you don't know what QVCGA is, and you mentioned it as a TikTok shop. That's actually hysterical. Um, not to be distracted from what I was saying, but I noticed that out of the corner of my eye. That's great. Oh, they are doing a TikTok shop super brand day. Oh, that's interesting. QVCGA is the future of TikTok. Yeah, for sure, for sure. The stock is gonna go to the moon if the young people think it's a TikTok shop, and that's what the company does. I'm about it. Anyway, sorry, getting distracted. Oh, man, we got these India headlines hitting. Indian Armed Forces launched Operation Sindoor, hitting terrorist infrastructure in Pakistan, and Pakistan occupied Jammu and Kashmir. It says no Pakistani military facilities have been targeted. 9 sites are targeted as part of Operation Sindoor. Anyway, what I've been trying to say about stocks and earnings reports, when they move up into the report, a lot of times, for example, an inline report's not enough, and you might trade down on an inline report. You might even trade down on a small beat, because they've priced in so much expectation of the up move. So given the degree of the move, the parabolic nature of the move into the stock, I'm not surprised that Palantir reported a great earnings report and went down. And that's actually why I was calling for longs at certain spots in it today. Palantir was interesting because I think that move lower on the report just put a lot of people that chased Palantir out of the money. So this heavy selling that you see in the beginning of the day here, which is a big move, I think that this is just all people that were stuck and had to puke out stock. And then it was able to give a really big appreciable bounce, which we called for. I think I started buying this thing around 10 a.m. Not necessarily off of this pivot low, but just off of that concept that this thing was now getting really extended, was not catching a bid at all. But I thought it was just a wash out of trapped longs. And once you can wash them out, hard to say exactly how long that's going to take. You could get a more appreciable bounce. So that's why I'm short Palantir and I'm covering Palantir on the way down. But at a certain point, I was like, if I wasn't short Palantir, I would want to go long Palantir. So I ended up buying that PLTU, and that actually turned into a really good trade for me. So I ended up making, pretty decent chunk of change in PLTU as a long trade, and it closed well enough. I was like, you know what? I'm going to keep a small amount of this and keep managing the position and be long and short Palantir at the same time for a little bit while this thing is kind of stuck between this 8 and 21 EMA, and I'll just kind of wait and see what happens. And then AMD now, just talking about earnings, I think it's just the opposite. Like, people just have such low expectation of AMD at this point. Everyone, I don't want to say they've left it for dead, but if they're the secondary player to NVIDIA, if you're not first, you're last, right? So AMD has just been getting annihilated, had a high back here of $220 in 2024, worked its way down to 80 on the April Liberation Day sell-off, and has recovered a little bit. We know that $100 has been a huge level for the stock, but I felt that this maybe could work its way up on an okay report, and the report seems decent. The guidance seems pretty good. Nothing in there that's knocking my socks off, but advanced money destroyed, didn't destroy any money today. So yeah, so nice little bounce back on that. Overall, when it comes, circling back to the market a little bit, we've just been in a really tricky spot because I think that Goldman Sachs note that I basically read out loud during the morning meeting today kind of perfectly sums things up. The Qs and SPYs are getting hit right now. I wonder if it's on the India headlines. But I think that Goldman Sachs report that I read out loud this morning, which I will spare you guys from me reading out loud again now, hopefully if everybody's read it on their own, really, really sum things up perfectly, where it's like, there's been this positioning risk to the upside. We've called for it. It's still there. But at this point, it also seems that we may have gotten to a ceiling. I said it in yesterday's morning meeting, and then I felt like that Goldman note reinforced it, where it's like, yeah, we've got this strong systematic bid. And you still saw it in the price action today, that systematic bid coming into the market. It's very strong. It's not going anywhere. It's going to be here for at least this week, probably next week as well. But at the same time, this move has just become so big that the Goldman headline kind of started to postulate that we might get a flip where headline risk starts to become more to the downside than the upside when it comes to things like these trade negotiations. And if you guys remember, maybe a week or so ago, one of the things I said we should pay attention to is when positive headlines are not being as interpreted as positively by the market anymore. We know that for like a couple week period of time here, really ever since the Liberation Day pause, the big update on April 9th, what we have consistently seen is bad news will bring the market down, good news brings the market up, but good news brings the market up by way more than bad news brings the market down. And it seemed like that Goldman note was kind of postulating that we might be hitting that pivot point that I was saying everyone should keep an eye out for, where good news doesn't bring us up as much anymore. And you even saw a little bit, we got the Fed tomorrow, so a lot of times the day before the Fed is a quiet day, and it kind of was, but we had these hectic headlines coming out from the Trump administration in the middle of the trading session today that, seemed to be positive to me. I would be nervous as a short, and I am a short, when you got Donald Trump talking about, like, be excited for the big announcement that I'm going to be giving you guys soon. And the reason why I would be nervous about that is because if anyone remembers, on Tariff Liberation Day, he told everybody, I think it's a good day to buy the dip, before he actually came out and did the news. Is this a repeat of that? I don't know. So, we'll see what happens with the Fed tomorrow. We'll see what happens with this supposed big announcement that we're supposed to be getting from Donald Trump over the course of the next couple of days. We did see some positive headlines coming out of the UK on getting a trade deal done, but it didn't seem to uptick the market at all, and it doesn't really seem like headway on a China phone call is upticking the market as much as it was previously. And what that Goldman Sachs note was, and this is something I've also said, but I love when I have a thought process and I see it reinforced by other smart people. It just helps add certainty to my thought process. But one of the things that I've been saying more recently about a deal is it's not just getting at this point, now that we've bounced back from Monday a week and a half ago or 2 weeks ago, uh, um, SPY 508.50 to SPY 568.50, a $60 upside bounce. I don't think that coming out and announcing that a deal is done is good enough anymore. I think that the substance of the deal matters. And I've been saying that, more broadly when it comes to like Japan and India because those are the ones that we're expecting to happen soon. The Goldman note was talking specifically about China, and they said that they think that what's priced in the market at this point is a China trade deal done at 40% tariffs. So what that means is if a China trade deal happens and it's 70% tariffs, the market probably gets smoked on that. But if a China trade deal happens and it's 20% tariffs, then the market could still move up a lot on that. So I think we're at a point here when it comes to any trade deal, and I would certainly expect one from Japan or India or the UK to happen sooner than one from China, where it's not just that the deal gets done anymore. It's what's the substance of this deal. Where does this deal put us versus where we were at the starting point, let's just say in 2024, before any of these new tariffs got added on or they were even being discussed. So that is to be seen. So we're just at a spot here with the market where it is very hard to be short because I mean, but by my estimate this morning, the CTAs and vol control combined could buy up to like $8 billion worth of SPX per day this week, which is just a insanely big number, especially in a lower liquidity tape. Um, and you've got corporate buybacks back on. That's very hard to fight. But the flip side of that is, I think a lot of the good news, if you will, is kind of priced into the market at some point. Not all of it. Good news can still bring us up, but I don't think that we're where we were 2 weeks ago when the slightest hint of the potential of good news was giving us these really big upticks. So what that leads me to believe, as I try to figure out, like I always like to approach the market where I've got this really big picture thought process, and then I can whittle that down to today and to even a 5 minute chart or to a 15 minute chart and what I want to do. But I also recognize that if I'm looking out 2 months on something I say right now, that could a month and a half from now I might have a completely different thought process because the evidence changed and the technicals changed and the news changed or whatever it is. But when I'm trying to balance this systematic bid that's in the market with this potential that we've had a huge move up and a lot of the goodness is priced in, it would make sense to me to see more broader rangy price action, I think, for at least this first half of May. For this week, next week, maybe when we get to OPEX, it could open things up a little bit. But honestly, it's probably even more probable that any bigger picture down move or a real revisit of like bear market price action doesn't happen until June, July. By June, July, I would expect that the systematic bid has fulfilled a lot of what it needs to. And at the same time as that, that's when I would expect that we would really actually begin to see some of this tariff stuff begin to hit the economic numbers, which, someone else said this, City CEO or somebody said just yesterday, you're not seeing any of the tariff stuff really in the April numbers that we're seeing. So the April hard data actually still looks great, which circles back to the Fed tomorrow and why the Fed can't act. Scott Bessent said it himself yesterday. Basically told us the Fed can't act right now because hard data looks good and the PCE numbers look good. So how can they cut at this point if the economy is doing as well as it is based on those numbers? The real equation starts to happen when we start to see the tariffs in the hard data, and then maybe that gives the Fed the leeway to do like a July cut, as an example, would make a lot more sense. So we'll see what happens tomorrow. While my broader expectations are more now for like a rangy market in this area, I'll say between SPY 550 and 570. You do got to keep in mind that there are potential catalysts in either direction that could change everything and loosen the entire market back up. And one of those potential catalysts is the Fed tomorrow. So I'd be hard pressed. We could definitely go down on the Fed tomorrow, especially with the move up that we've had. But I'd be hard pressed to think that we get like a major sell day, like a 2.5 to 4% down day on almost anything that Powell says, because Powell's message has been very consistent. So what the market moves on is surprises. And if the message from Powell has been very consistent on, it's been relatively hawkish, we're not cutting anytime soon, we need more time, we're in wait and see mode, and he repeats the exact same thing tomorrow, can we trade down on that? Yeah. But I don't see that turning into a disaster necessarily. But we'll see. Someone posted, I think it might have been Sherry in the VTF earlier, that looked like there was a decent amount of downside positioning in the options market for in front of the Fed tomorrow. So we'll see how that plays out. Trying to think if I have anything else for today. Palantir was my biggest focus. Managing my swings is my biggest focus. I day traded XBI at one point on actually this move. I was all out into that. I honestly didn't even call it out because I was doing something at the same time. But this was like the only real pure day trade I took. Literally caught the top tick to exit the position, and then was just out of the way and didn't go back into it. XBI was just getting smoked today on whoever it is that RFK appointed, and also I think it generally makes sense per that Goldman note that some of these more rate sensitive stocks and sectors are where the relative weakness is right now. So that's all that I've got. I am happy to answer any questions starting in the VTF. So anyway, what is QVCGA? QVCGA, they do like the home shopping network, which the extent of my experience, I've never even seen the home shopping network, and I'm younger than some of you guys in the VTF, but older than some of you guys in the VTF, is like being home from sick when I was a kid and turning on the TV and just scrolling through channels and seeing the home shopping network on TV. But that's what QVCGA is. It's the legacy of the home shopping network. They have earnings after the close tomorrow. And I guess some news came out after the close today related to the first ever TikTok shop super brand day. Cool. Scrolling down here in the VTF. It felt positive. It felt like he took it back. I'm sure what you're referring to there. For me, like, what rhetoric do you think the market is looking for to go down on the Fed? Aren't we assuming that rates won't already be cut already? Yeah, that's exactly what I'm saying. So that's why I'm hard pressed to think that this market really gets smoked tomorrow on the Fed. If he comes out hawkish, it depends how hawkish he is, and it probably matters more on what he says about the potential of future cuts, to be honest, than anything else. Like, if he were to say, there is no way I'm doing cuts in July, which he would never say that because it's just not how Jerome operates. He speaks very cryptically. He's very good at saying nothing a lot of the times. So I'm sure we're just going to get the same message of data dependent, wait and see, data dependent, wait and see, tariffs are bad. So I would think that that would already be somewhat priced in, and that's why I don't think that we get smoked tomorrow unless he comes out so super hawkish that the market starts to lower the probability of cuts for later in the year. But that's what I'm saying. I actually wouldn't be surprised if the Fed tomorrow. I know Pat said he was a little bit nervous about it, but I wouldn't be surprised if the Fed tomorrow just kind of turns into a non-event. To be totally honest, but we'll see. From David, do you ever have a stock gap down past your stop loss order that you placed? If so, if you have a stop loss order in place, does it automatically get triggered if it gaps down past your stop loss order? Maybe gap downs mainly apply to holding overnight. So gap downs mainly apply to holding overnight, though it is possible for a stock to get halted during the day and then to have a gap after that halt. You cannot keep, at least not with T3, any orders out overnight. And stops, which typically route to market orders, do not work outside of market hours. So outside of 9:30 to 4, your stop loss is not going to work. And that's probably a good thing. You don't want stops going off on false prints pre-market when there's no liquidity. So yeah, it's not going to work. If a stock gaps down from an intraday halt past your stop loss as your stop trigger, I genuinely don't know the answer to that one, actually. But circling back to the other part of your question, if a stock gaps down past where your stop would be, what do you do? So I think that that's an important question to answer. First of all, you want to try to lower the probability of that happening to begin with. That would be the first thing that I would say. Overnight, anything can happen. News can happen overnight. You never know. But you want to lower the probability of a stock gapping past your out. The way that you lower the probability of a stock gapping past your out is by only swinging positions that you're in the money on to begin with. I used to refer to this as my 1% rule. That was really more of a guideline. In a lot of circumstances, especially with how the market's been trading recently, 1% is probably not enough. But the concept behind the 1% rule was I will only swing a position if I'm at least 1% in the money on it. So if I swing a position and I'm 1% in the money, and the stock gaps down even a full percentage point, I gave back all my open profit on the remaining part of my position, and hopefully I booked some profit yesterday, so that means that I'm still profitable. But even a full 1% gap down, I'm not in trouble because I had a 1% cushion to begin with. If you don't have that, you shouldn't be keeping the position, right? If you're in the money already and you keep it overnight, you're putting yourself in a win-win position. Either the trade continues to work in your favor based on a good-looking daily chart and you make even more money, or it moves against you, maybe it gaps against you, but you had a big enough of a profit cushion that you basically just give back your open P&L and you get stopped out. So best case scenario, you make a lot more money. Worst case scenario, hopefully, is that you just break even, though that's never the worst case scenario when you're keeping a position overnight because, again, anything can happen. I once, many, many years ago, was swinging a stock called Chifu, which is a Chinese company. I think that they're a company again now, actually. Eventually, they got delisted. But Chifu, I had a nice trade in it. I had a huge profit position in it. And I kept it overnight. I was like 10% plus in the money on it, well more than the 1%. And I kept it overnight. And then that night, they announced an accounting scandal. One of the reasons why I generally avoid Chinese companies that I don't consider to be the major companies because it's not that unusual to see accounting scandals happen on smaller Chinese companies. There was an accounting scandal overnight, and the stock gap down like 15% or something like that. And I, gave back. I gave it all back. I had a 15% gap against me the next morning. That can happen. So that's the true worst case scenario, but you can't predict that. And generally speaking, you want to try to consistently put yourself in those win-win positions in your trading and then maximize them. The opposite of that is putting yourself in a lose-lose situation where you bought a stock during the day, it's against you, you don't want to take the loss, and you decide, I'm going to keep the position overnight because it's going to come back. And if it does gap up again the next day in your favor and you get back to break even, you're selling your position, and if it gaps against you, you're just screwed. That's a lose-lose situation. So first thing that we can try to do is try to lower the probability of stocks gapping past where our stop loss is meant to be. With that said, in trading, anything can happen. And I have had on many occasions stocks gap past where my stop loss is supposed to be. When that happens, I implement what I call a 15-minute rule on my trading, which basically means I don't stop out until 15 minutes have gone by. So inherently, that does open me up to unlimited risk between 9:30 and 9:45. If the stock somehow, goes bankrupt in those 15 minutes, then I would lose the full value of the position. But basically what I do is after 15 minutes have gone by, whatever the low is after 15 minutes becomes my new stop loss. And then usually, if it's bounced a little bit off that low already, I'll add off that low also. I'll average down versus my new stop loss price. The reason why that 15-minute rule I have is in place, and it's actually saved my butt many times, is because you can almost see this in Palantir today, though it lasted for more than 15 minutes. Panic selling from people who are out of the money typically lasts for the first 15 minutes off the open. In more extreme situations, it can last for 30 to 45 minutes. But basically, I don't want to panic out with the herd into a gap down. I want to give it a few minutes to be able to wash out the people who are out of the money. And again, Palantir is a great example of this, though it lasted even more than 15 minutes. This selling in the beginning of the day that lasted for 45 minutes, 40 minutes, is a washout of people that were long the stock in the earnings report. That's what that is. And I said it in real time at the time if you were on the VTF and listening. And that was the reason why I eventually went long PLTU at the same time as I was short PLTR. And this is a more extreme circumstance because it's on a big earnings report after the stock had a really big upside move. So it took more than 15 minutes to wash out the panic sellers who are trapped in the stock. It took a whole 40. But basically the idea is that I don't want to participate in panic really ever with the herd. I think in trading, and this is the concept of trend following, I think in trading most of the time what you want to do as a trader, let's say 90+% of the time, maybe 95% of the time, most of the time in trading is that you want to do what everybody else is doing. It's cool to be a contrarian, right? The concept of being a contrarian is it sounds cool, be greedy when everyone is fearful. I'm a contrarian. And that be greedy when everyone is fearful saying, it comes from Warren Buffett, I think. But note how that line, actually dissect that sentence. Be greedy when everyone is fearful. That's the 5% of the time. That's the extreme. So what I've really learned about trading is that 95% of the time you want to do what everybody else is doing. Follow the herd. That's what creates trends. In the extremes, for example, panic, or when people are trapped, or into a parabolic upside move on the market, that is when you want to do the opposite of everyone else. That 5% of the time. That's when you want to be greedy when everyone else is fearful. And these types of gaps, or if there's an event where there's a big gap and it's probably what you need, if you go back to rule number 1 and try to minimize the probability of a stock gapping past your stop loss, that means that if it is gapping past your stop loss, it's probably because there's an event that's causing that to occur. And if there's an event that's causing that to occur, almost similar to this Palantir situation, I don't want to be panicking with the herd. I want to be calm when everyone else is freaking out, and let them all puke their stock out, and then assess when a pivot has come in or when some degree of normalcy has come in on what I should actually do. So that's why this 15-minute rule for swing positions occurs, where yes, in theory, if the stock gaps past my stop loss overnight, I take unlimited risk on that trade for 15 minutes. But that's just because at this point, I'm already in a bad spot. I'm not going to panic out with the herd. I want to be able to let the dust settle and manage the position, as opposed to just, puking out at, 106.50 when you're almost at the end of the fearful selling that's coming in. So I hope that helps, and I appreciate the question. Why is there a tail on your Nike chart? It's a daily chart. It looks like a false print. What is this from? April, May, daily chart. I don't have it. A lot of times when there's a false print, it resets itself. The chart resets itself, and there, I just got one right there. No, it's not a real print. And that chart will typically reset itself. Now I got one here, but it should reset itself soon. Probably even if I switch from a 5-minute to a daily. Now, still there. But yeah, it's not real. From Tate, I asked Josh yesterday, but I'd love to hear your thoughts too. Do you think we should be prepared for at least a 10% probability of the market going back to new highs before the end of the year? Yes, you should be prepared for any and every situation to occur in the market. For sure. You should be prepared for any and every situation. There is a probability that anything that can happen will happen in the market, and you should be prepared for it. Does it mean that I want to go 100% long because there's a 10% probability that the market goes back to all-time highs? No. I want to do what I always do, which is evolve as the circumstances present themselves. So yeah, it's a possibility. I want to like say a couple things, but I hate how this market forces me to dive into politics so often. But I don't think it's a secret that I hate tariffs. Anybody who's been with me for a while knows that I was bitching about tariffs when Joe Biden was president. It's just, it's not a Republican Democrat thing. It's not a who is the president thing. It is I am stalwart against tariffs. I have been that way since I was an economics major at NYU 20 years ago or whatever at this point. I just, tariffs are, we just have so much data that shows that tariffs are just horrible, terrible economic policies. I think that the Trump tariff situation is the worst policy mistake that the United States has made in almost 100 years. With that said, I was also around when Trump really did some stuff to pump the stock market in his first term. There are other things he can do if he can ever get himself out of this tariff mess that could be great for the stock market. And most people who and again, I'm really just trying to limit the amount I talk about politics here, but it's so hard sometimes with the situation that we're in. And I have very close friends who are deep red and deep blue, and have conversations with them all. And I know a lot of finance guys who were Trump voters because they thought he was going to pump the hell out of the economy and the stock market. And a lot of them are singing a little bit of a different tune now for obvious reasons with the tariff situation. But it doesn't mean that he can't implement policies that end up being great for the stock market. I just don't think tariffs are it. He's got to get through this tariff situation, and then he can focus on other things. I really feel like it was a strategical mistake also on just how this entire thing was approached, doing kind of the triple whammy of tariffs, deportations, and austerity through Doge at the same time. And look, I'm not going to get into the potential benefits of deportations and some of the Doge government austerity measures, because I don't think that the benefits that you could point to there are economic and stock market benefits. So those benefits may exist, but from a economics perspective, entirely, deporting illegal immigrants is not good for the economy. That's our cheap labor class. Again, I'm not making arguments about criminals and all illegals are criminals, so therefore they should all be expelled. Like none of that actually relates to the economy and markets. I'm just talking very, very specifically about the economy and markets. He chose to kind of do all three of these things at the same time, which I just think was very difficult instead of doing one after the next. Or maybe how about I do some degree of Doge while I focus on tax cuts. The tax cuts, when he did them in his first term, were a huge boom to the stock market. If he cuts taxes for corporations further, that's a huge boost for the stock market. Might have other negative repercussions down the road, economic ones related to the debt and everything else. But we saw it in his first term. So it's not like. I just think that this guy keeps his scorecard, and part of his scorecard is the market, even if he's denying that and saying, deal with the short-term pain, don't worry about it, I'm going to come back to it. So it wouldn't surprise me at all if we can ever get through this tariff situation, especially as we begin to approach midterms, that he does everything he possibly can at that point to boost the market higher and boost the economy higher. Because and again, it's just so hard right now to not talk about politics when you're talking about markets. But I think that most people can agree the guy that just won the Canadian Prime Minister seat, Carney or whatever his name is, he's from the Liberal Party. That was like the biggest comeback in like election history. That guy was going to lose huge to the Conservative. And the reason why the Liberal Party won in Canada was because of the United States. Because of Trump. Because of this 51st state stuff and the tariffs and everything else. And, my personal, and I'm going to circle, I'm saying this specifically because I think it relates to markets. Let me just say that. I think that if the midterm elections were happening right now, that the Democrats would crush the Republicans. I also think that if you had the presidential election, if that could re-happen right now, that Trump would get demolished. I just think that we see that in the numbers. But he's got time before the midterms occur. He's got time to turn around the stock market, bring up his approval rating again. His approval rating has gone down with the stock market and with the tariff stuff. So I think that there's a very real chance that as you get closer and closer to midterms, where a loss there could threaten his power, because right now he's got the Senate, he's got Congress, and obviously he's got the executive branch. He can't have this same stuff going on right now when people are going to the ballot box for those midterm elections. And he could pull, policy triggers to try to really pump this market back up. I don't think it's impossible at all for the market to see new all-time highs. We're only, 10% away right now in the S&P, or 10% off of our highs, I guess I should say, at this point in the S&P. You could easily get up there with some really positive developments. But I just think that he maybe got himself into a pickle that was more than he expected, because no one told him how tariffs work, apparently, before he started to do some of this stuff recently. So anyway, that's my opinion. I probably dove more into politics there than I should have or would have liked. But again, to some degree in this environment, we have to more than ever, just because in my trading career, I've never seen politics intertwined with the market and the economy to the degree in which it is right now. And it's frustrating for me, to be honest, because I hate talking politics um, in the virtual trading floor, or I mean, generally, period. To be totally honest, um, but it's just become nearly impossible. But we all, and this is a message to all of us. This is a message to myself first and foremost, but also a message to everybody. Um, Try to keep as much as possible your political opinions to yourself, and focus on the market. And obviously, if you need to talk about how a policy impacts the market, then you have to do that. But I don't know. But beyond that, we should all do our very best to keep it to the charts. But yeah, long-winded answer there, Tate. But that's kind of my thought process. Is the capex is the capex miss or a beat from AMD? It was higher than expectations, right? So yes, it was. Um, I generally assume that capex is the one number that if it comes in higher than expectations is not necessarily a good thing. I think it depends a little bit on the situation and the company and everything else, but generally them spending more than was expected, having higher capital outlays than expected, is not necessarily a good thing. Uh, for Milai, how have you gotten better at recognizing days where there's less opportunity versus days where you should be pressing? I mean, primarily that just comes from my pre-market research. It comes from if I feel the technicals as I'm studying them pre-market alongside the gap are giving me an advantage or not. And if I feel like that setup is giving me a strong advantage, then that's going to be a day where I want to press it more versus less. And then also would just be the news calendar. Do we have a really important number that's going to come out pre-market or during the day? Is there a Fed situation that's going to be occurring? Like usually on Fed days, like we have tomorrow, usually Fed days are not good trading sessions pre 2 o'clock. At the open you get your normal opening price action from 9:30 to 4. From 9:30 to 10:30 or so, and you can trade that. But starting 10:30, 11 on Fed days, the market usually dies, and then you kind of go in wait and see mode for 2 o'clock. As just an example. So it's just a combination of studying the technicals pre-market and kind of knowing what the news cycle calendar is. From Sherry, do I think Nike has bottoms? Bottomed is a big word. I don't really like to call bottoms and tops in the stock market because it's a fool's game. I like to call areas of potential retracement. Um, this is a bear flag. It inclines me to believe that it is not bottomed. Especially because I think that the stock market's going to work its way down, and that this company is particularly impacted by tariffs. So, I would not be surprised at all to see Nike at some point in the relatively near future break 52. I think that the charts here look pretty bad for the stock. I tend to be biased towards the company. I love Nike as a company. I pretty much will only buy Nike sneakers. Nike was the first stock I ever owned when I was a kid, and it always treated me really well. So I tend to have a real positive bias towards the stock. But now technicals there don't look good. The company's been struggling recently with competition in a way that they almost never have before, and should also struggle from tariffs. From David to confirm, using 8 and 21 EMA. Yeah, so the 8 and 21 EMA are really important to me. What was that? Oh, great. I just had a weird print that sent my P&L to down like 200,000, which is past my lockout number, and I just lost all my ad risk orders into the market. That's annoying. Off a weird false print from somewhere. Well, I'm complaining because I just lost all my bunch of orders. Whatever. Deal with it after. What was I talking about? Yeah, 8 and 21 EMA. The 8 and 21 EMA are really important to me. The space between the 8 and 21 EMA is what I consider to be the technical equilibrium for any stock or market that I'm looking at. I like a 200 SMA, but only on daily and weekly charts. I also like a 20 and 50 SMA, also only on daily and weekly charts, though I don't have one on the charts that I'm sharing here. I like to utilize the 20, 50, and 200 SMA just to understand essence of trend for the time frames. 20 EMA being the small time frame on the daily chart, 50 EMA being the intermediate time frame on the daily chart, 200 being the big time frame, and then the slope of the moving average is the essence of trend for that time frame. If it's sloping down, like the 200 day is a Nike, the essence of trend on a very big picture is lower. Over to the YouTube from AR. Do you think that the Fed could cut 25 basis points tomorrow despite the flat expectations? I do not think that the Fed. I would put that probability at 0.5%. Anything is possible. I do not think it's going to happen. If they do cut, do you think that the market reaction would be sustainably bullish, or does there need to be more of a catalyst? It probably would be very bullish. I don't want to overread that and say. I don't want to overread that because maybe people like overread it and say, oh my God, well, if they're cutting, they think that there's a huge problem to the economy and we go down. I think it's as simple as if they were to cut, the market would be up really big on it, but I don't think it's going to happen. From David, specifically, Trump said it's a good time to buy. Then he left the name of his symbol and initials, DJT. From Sky Shaddix, what people say. When people say the market is bid, what do they mean? It just means that there's buyers present, basically. That they're bidding up, right? So like, the difference between a bid and offer. Bid is how you where's my bid is how you buy and offer is how you sell. So if the market is well bid or they're bidding up the market, then they're pushing the price higher. So just another way to say the market's strong or the market is bullish. 30 minutes before the last FOMC, Trump came in with the pause. Oh yeah, that's right. So there's definitely headline risk. If the Fed announces more QE tomorrow, that may have a positive reaction by the market. Yeah, if the Fed does anything, it might just be to give us a more aggressive update on the bond buying program, or the bond, the tapering program, whatever that's called again, escaping me. But we kind of saw that already last time, that they were tapering that off a little bit. So we'll see. Or the selling, I guess I should say. From David, can you talk about letting trades play out versus the desire to manage them? Isn't it one and the same? I would argue that it's one and the same. So I'll tell you why I would argue it's one and the same. When you put a trade on, you create a game plan for yourself for reward maximization. There's a lot of different ways that game plan can look. It can implement trailing techniques. It can implement more of a hold or less of a hold of a percentage of a position. It can implement a scaling system of scaling in and out of the trade as it moves into your favor. So letting the trade play out, I would argue, means letting the preset game plan that you had already established for yourself play out, which therefore inherently means that you're managing the trade to the game plan. So it's one and the same. I think that the root of the problem of your question is that you may lack good game plans on the trades that you're taking. And then the trade is working, and you're like, oh my God, my trade is working. What do I do? Should I sell some? Should I let it run? And I think what you're saying is like letting it run means letting it play out, and selling some means managing. But I would argue that that is just describing a lack of a strong game plan, because your game plan should already be telling you what to do. I want to repeat something that I say often, and I'm going to repeat it because I think that this is the root of successful trading. And it's worth me repeating over and over and over again. So I'm going to repeat it. I'll start with a preface. I've been trading now for a long time, 15 years with T3. I have been managing traders for T3 for 12 years. I have seen many people succeed in this business, and I have seen many people fail in this business. The most interesting part about it is that I have seen people succeed and fail with almost the exact same strategies. What I have come to learn is that it's not really the strategy that matters. There are many, many, many strategies that people can utilize where they can become profitable. And you can take any one of those strategies and also fail as a trader. So what's the difference between people who succeed and people who fail when they approach the market with nearly the exact same strategy? It tends to be the core of how they are able to manifest that strategy consistently into the market. And what that comes down to is the following. That term I just used, strategy, could also be referred to as edge, right? Your edge in the market. That's a common term that people throw around in trading. Basically, what edge means is the strategy that you have that enables you to be consistently profitable over time. Nobody makes money in every trade that they put on. Nobody makes money every day. But the best traders are consistently profitable traders. And they have an edge. Their edge is rooted in risk, reward, and probability of success, where the numbers work out for them in the long run. You could be a trader that risks one to make one, and you could be right 60% of the time, and you have an edge. You could be a trader that risks one to make 10 and is right 15% of the time, takes losses on 85% of the trades that he puts on, or she, and makes good, consistent money. I've seen people who are successful hyper scalpers. I've seen people who have had successful HFT robots. I've seen this guy Warren Buffett, who is a legend, who just announced his retirement, who is like a deep value investor, be able to be extremely, extremely successful. So many, pairs traders, different products, different time frames, different strategies. People have succeeded and failed. What you have to have is consistency with the approach, okay? So being a successful trader, being a consistently profitable trader means that you have to be consistent, right? Consistently profitable trader. That means that you have to be consistent in regards to your actions to the market. The only way that you can be consistent in regards to your actions to the market is if you have rules in place that enable you to do the same thing over and over and over again in similar situations. And then what a game plan is the manifestation of those rules into your execution in the market. That's what makes game planning so important. The game plan is the execution of consistency that creates consistent profitability. So before you enter a trade, you need to know every aspect of that trade. Where am I getting in and why? Where am I getting out and why? And what does that look like? On the upside and on the downside. Downside probably being the more important aspect of that, because 90% of people who fail in this business fail because of failure to manage risk. 10% of people who fail in this business fail because of a failure to manage reward properly. But when you're entering a trade, you need to know every aspect of that game plan. Where am I taking my loss if I'm wrong? Where and how am I booking profit if I'm right? So that then circles back to your question. You're in this trade. Am I letting it play out or am I managing it? The answer is both. You're letting it play out per your game plan and you're managing it per your game plan. And that is how you become consistently profitable in the trade. And for a trader who's a brand new trader, you can start this very simply. I take breakout trades where I buy the breakout and I put a stop loss at the ignition bar low, and I have a game plan where I incrementally sell. I sell 50% of my position to cover my risk. I incrementally sell out another 25% of my position, and I trail 25% of my position. I don't know, boom. Very simple. Very simple. And that can become a starting structure for a new entry-level trader to build off of as he or she learns more and creates more complex game plans over time. Um, I today took uh, looks like I took about 1,400 unique trade executions today. I only purely day traded one stock. So, however many of those executions were in that one day trade that I took, plus everything else is based on a swing trade. I'm able to do these afternoon meetings. Maybe not yesterday with Palantir was a little bit too crazy, but I'm able to do these afternoon meetings and still be executing on trades and have these relatively lucid conversations with you guys because my game plans are so structured that I know exactly what I need to do in any moment of any trade without having to think about it. I don't think about my trades after I'm in them, or relatively little. I do. Maybe if I'm in my own head, I do. But even if I'm in my own head, I try not to ever let that change what I'm actually doing from an implementation perspective. It's just my game plans are just so concrete and so core to me that I know exactly what I'm supposed to do in every position I'm in at every single price over the course of the lifetime of a trade. So appreciate the question, David Dean from Scholastic Pi. Good afternoon. Glad that Palantir was brought back closer to Earth from a valuation perspective. It's still pretty far away from Earth, in my opinion, but it's a great company. What would your risk management strategy be if Palantir were to pop on earnings? I held some short, uncovered calls and rushed to cover some portion of it at 125. When the earnings beat, it turned into a small loss and Palantir dropped later. You were short calls. That seems dangerous going into an earnings report. I'm curious what strike. So I had a game plan for that. Obviously, I just went over this entire thing about game planning. And I kind of talked about Palantir a little bit earlier in the meeting. I'm not sure if you were here for that or not. Kind of talked a little bit about what I did going into it. I took almost a third of my position off. Unfortunately, for a loss around 124.50 going into it because I couldn't responsibly hold that amount of stock. I also had like some sort of a call spread going on where depending on where the stock went, it could have saved me six figures of a loss into an upside move from those options that I had on. And then I also had a game plan on how I was going to add into a move higher and how much. And that really entirely depended on where the stock traded to. And if I remember correctly, it had a brief pop, right? I think I shorted that pop because it was per my game plan, right? Didn't it have a really quick pop? Like down and then up, and then the real move was down? Yes, it did. This tail is real. I shorted 128s on this move. I hit the bid at like 128, 127.90 something, I think, on the way down. After it put in the high of 130, it was on the way down. I would have liked to have actually gotten a better price. I could have been a little bit faster. But yeah, it was just, again, per the game plan. So I knew how I was going to make money on it, and I knew how I was going to lose money on it. From Liam back in the VTF, what do you do in the slower days? I didn't trade today or yesterday. Am I being too strict in my rules for entering? If you didn't place a single trade in 2 days, maybe. You're being too strict. I don't want to say yes. I would prefer actually with newer people that they start a little bit stricter and then broaden their horizons over time. So I don't think it's the end of the world. But look, there is always something to be doing. There's always research to be doing. There's always things to be reading. I mean, if you're a new trader on the team, and I know you are, Liam, don't tell me that you understand every single piece of information that is in Pat's note. Because if you don't, you could be going through Pat's note and digesting every word in here that you don't necessarily understand with Chat GPT, or I personally like to use Perplexity, and asking it questions on, what does this mean? What does this mean? What does this mean? That's why I still do that to this day with some aspects of the Charlie McElligott notes when they come out, because those things get deep. They get deep into the weeds. And there was a time when I was reading those Charlie notes and I understood like a tenth of what he was saying, but I was reading them every day anyway. And then now when I read those notes, there are much less things that I have to put into AI compared to what I used to have to do. And if anything, my biggest problem, because I trade so actively, is sometimes I don't have the time to learn as much as I want to, because I don't always understand every single piece of information that I'm reading, and sometimes I don't really have the time to really just go in and digest and go deep into the weeds and try to learn every aspect of it either. But I do my best. So there's always more research that you can be doing. There's always more learning that you can be doing. There's always a book that you can be reading. So many great books out there on trading. A video you can be watching. Research you can be rereading. There's so much to do. AR on the YouTube says, Liam, you are a great man. Keep grinding. It'd be funny if you were the same person with two different names in the YouTube and the VTF and you were complimenting yourself. That'd be cool. All right. Almost 5:30. We had a great afternoon meeting today with a lot of really good questions. So I'm going to wrap it up there. Have a wonderful night, everybody. I will see you all tomorrow.